before you file your taxes, you need to gather some information, and here to talk with me about that is Philip Herzberg from Team Hewins. Philip, welcome.
Great to be on your show, Bob. Thanks for having me.
Great. So folks will need a lot of information. Where to begin? What do they need to know?
Well, 2021 tax reporting season is definitely upon us here. So it's really time to gather all the information you need to prepare to file the tax return. So just really 4 essential planning insights with the related key forms. It's the Form 1099-R, Form 5498, Form 1099, and then the W-4. So right. I'll go into as far as the Form 1099-R. Here it goes. At year end, your individual retirement account custodian or provider issues Form 1099-R, which reports the amount of money you withdrew from your retirement, pension, or annuity accounts in 2021. So if you made an IRA qualified charitable distribution, or what we call a QCD, or gifts directly to qualified charities, they will be included in the 1099-R totals. So be sure you notify your qualified tax preparer of any details of any QCDs from your account. IRA custodians are also not required to identify transactions as QCDs on the annual 1099-R form, so it may be reported as an RMD. So even though qualifying gifts made directly to charity from your IRAs are reported on the return, they will be excluded from your taxable income.
Right. And what about rollovers? How are those reported on the 1099-R?
Well, you will receive a form anytime there's a distribution or some sort of withdrawal from a 401k, an IRA. You will receive a 1099-R. Now, you need to show this to your accountant, but just note that if the 401k or IRA is directly rolled over into another qualified retirement plan, that is not reported as a taxable event. But the thing to know here is that if you do take a distribution or withdrawal from an IRA or 401k qualified plan type account, and the check is written in your name and it's not put back into an IRA or qualified plan within a 60-day period, then that will count as a taxable event. So just be on the lookout for that.
What about the Form 5498? What do people need to know about that?
Sure. Well, you should expect to receive Form 5498. It's more of an informational return that's sent by the IRA account custodian to the IRS only if you made contributions or rolled funds into a traditional Roth, SEP, or Simple IRA in the preceding tax year. So although the Form 5498 contains important information that you should review carefully for accuracy, you do not need to file the form with your taxes or do anything with it. So be mindful that this form cannot be generated after April 18th, which is the tax filing deadline. You have until then to finalize new contributions to your traditional or Roth IRA. Similarly, if you did a Roth conversion in 2021 and move funds into from your traditional to your Roth IRA, you will be receiving a separate Form 5498 after April 18th reporting this transaction. And as far as Simple IRA is concerned, the Form 5498 reports total contributions to your Simple IRA account if you have one to contribute to it, whether funded with employee or employer contributions.
All right. And then the Form 1099 is a catch-all for many types of income. Eager to have you walk us through that.
Sure. And as you mentioned, Bob, it reports income, dividends, gains, and losses into many separate categories. So you should have received your initial Form 1099 around mid-February. So there are oftentimes late or corrected 1099s, which occur when companies and funds reclassify income. And it's not convenient, but often unavoidable. So as companies close their books after 2021 year end, income and gains can get shifted from one category or quarter to another, which kind of alters the Form 1099 or 1099 totals. So if you own securities that tend to generate corrected 1099s, you should seek the guidance of your qualified tax professional about whether you should hold off on your final return until closer to the filing deadline.
Right. I imagine worst case is if you've already filed your return and you receive a corrected 1099, you might have to file an amended return.
Yeah, it's not the most, it's a nuisance to have to do that. So sometimes, again, the guidance here is maybe wait a little closer to the tax filing deadline to give a time for the provider to send the corrected statement 1099.
Right. What about the W-4? What do folks need to know about that?
Sure. Well, W-4, it's very important. I think it presents a real pivotal opportunity to review your current year's tax withholding. Nowadays, I mean, since 2020, the year 2020, as far as W-4 is concerned, you're able, there's been some changes in filling out the form with your employer about how much workers can adjust from each paycheck for federal and state tax withholding. So if one would complete an updated form, they're able to adjust tax withholding for any changes, which include family changes such as marriage, divorce, or having children. Starting a side business or second job may lead to higher taxes or tax levies. So you may want to consider increasing the withholding at your primary workplace to cover the projected difference in taxes. Similarly, retirees receiving income from Social Security, pension, or with retirement accounts, they may need to think about increasing withholding amounts or quarterly estimated tax payments to avert an unexpected tax bill.
Well, Philip, we've covered a lot of ground. Anything we missed or anything that bears re-emphasizing before we wrap up?
It's just make sure you gather all your information that you need to prepare for your tax return. I know we're here. The 2021 tax reporting season is upon us, and just make sure you ask your certified financial planner professional any questions, as well as your qualified tax preparer for any tax advice should you have any questions.
Great. Well, Philip, want to thank you for sharing your knowledge and wisdom with our viewers. It's greatly appreciated.
My pleasure, Bob. I greatly appreciate you having me on your show here. Thanks again.